This is a tale of two crypto investors that I created myself. And as you guys know, I'm not the best storyteller, but please stay tuned because this story has a valuable lesson. If you're a crypto investor and have crypto investments, you're going to learn a valuable lesson from this story that I believe happens every single crypto bull market, bear market cycle. Okay, so please stay tuned. I created this story myself and for a purpose. Okay. But this story starts with John and Jarvis, and yes, I made those names up for this story, but both of these guys have their first ever opportunity to invest in crypto, and they decide to at different times. This is the first crypto cycle. John gets into the cycle near the bear market. So he hears about crypto, he decides to invest near the bear market because he hears it's a bear market and that's the best times to buy, right? He's very intelligent, an active investor, and he's very smart. So he decides to invest near the bear market and buy some altcoins, just like many of you guys have, that he's bullish on. And John, he's a hard worker. He has around 10K, and he starts off his crypto portfolio with 10K, which is pretty good, right? Especially if you're a beginner and a beginner crypto investor. Some people might have more, some people might have less, but 10K. That's how much he gets into crypto. And then here we have Jarvis. Jarvis is a little bit different, right? He gets into the crypto cycle a little bit later on when Bitcoin really makes that first move into the 40, 50K. So he gets in a pretty, a little bit late, if I were to say, compared to John. So the difference here is that Jarvis, he does work and he has around $20,000. But his parents are pretty wealthy and they gift him $80,000. So altogether, Jarvis has $100,000 to invest in his first ever crypto portfolio, right? Getting in a little bit later on than John. So he has 100K and John has 10K. Now, as the market goes on, right, we get more bullish, the market goes up. John makes 50K, Jarvis makes around 180K. And they do take off a little bit of profits, right? But they're smart enough to understand that it's not the top of the bull market. And so they don't sell off 100% of their portfolio. Well, as time goes on, the top of the bull market does happen. And Jarvis makes around 250K. Meanwhile, John makes around 130K. Now that is pretty amazing, especially from $10,000. But a big part of that was because John was able to invest in the earlier stages of the bear market. So he got some pretty good deals compared to Jarvis. But still, Jarvis was able to change 100K to around 250, right? Around there. Now, the difference is John is very active. He's smart. He's intelligent. He's always being up to date with the projects that he invests in, whether he's watching videos like this one, right? He's probably subscribed to me, but he's also looking at the charts just like I do, technical analysis. So he's a very active investor because he likes it. It's part of his hobby, his passion, and he has 10K invested. So he's going to be, especially now after making 130K near the top. So John, being an active and smart investor that he is, he's able to see the signs that this is probably the top of the bull market. People extremely greedy, euphoric, people on influencers sharing basically repetitive numbers that we're going to hit for certain coins, right? Like past bull market, everyone is saying Dogecoin $1, Dogecoin $1. What happens? It hits 73 cents. So when people start to show you repetitive numbers that a coin is going to hit, most likely that's the top and it's probably not going to hit that price. So John starts to see these signs, and he feels like retail is fully in and we probably hit the top of the market. So John sells his whole portfolio. He sells his whole portfolio and he makes $130,000 with a $10,000 investment, which is pretty good. I mean, it's not life-changing money, but for someone who's just beginning to crypto with just $10,000, that can be a good start to invest in real estate maybe, or other types of investments. So on the other side, Jarvis is a little bit different. Jarvis isn't active as John is, right? He's more laid back, he's more relaxed. He isn't as interested in the news and what's going on, and he's just letting life really take his steps for him, right? But since the market is euphoric, since there's so much going on, he does come back a little bit, and he starts to pay attention to these videos and these these mainly bullish videos on us hitting repetitive numbers, and he starts to fall into that greed, right? He starts to fall into that euphoric emotion, and he starts to believe that, oh yeah, this coin that I'm holding, it's gonna hit this price because this person is saying that, and multiple people are saying that, and they're showing all these things. So he starts to ignore the obvious signs based on the charts that were very overbought, that were very in extreme greed and euphoric, and he starts to go along with those influencers. So Jarvis does not sell at all. He does the complete opposite of John, and he continues to hold, even though we're basically at the top. So what happens later is the market actually goes up a little bit more, and Jarvis goes from 230,000 to around 245,000. So he makes another $15,000, and he's probably like, see, I knew it, I was right. And he's probably even more bullish and greedy, and he's like, I'm not selling anymore right now because I believe, since I was right the first time, I'm going to be right again, that we're going to continue to reach these targets that still haven't been targeted for the prices of his coins. But that's where he gets it wrong, because even though the market did go up a little bit, that is the top of the market. And what happens next is a big drop, and the market comes down, and Jarvis goes from 245K to around 200K worth of profits. And this is where that market psychology really starts to take an effect, because the market comes down and he starts to see more videos from these influencers, and a lot of them are saying, relax, this is just a pullback, right? It's those classic videos where we have the big drop, and this is just a pullback. We're going to go back up and break all-time highs. Do not worry. And he starts to fall into that again because he was already connected to these people. So then what happens is we go a little bit up higher again, but then we take another big drop, basically creating a lower high and then creating a lower low. So this continues to happen until it's obvious that to Jarvis that we're basically in the bear market, or entering the bear market, and the market continues to go down and down until Jarvis just wakes up when the market is already down so much, and we're probably near the bear market, near entering the bear market. But at that point, Jarvis sells his portfolio for around $70,000 when he was at $245,000. So he was very stubborn as the market was crashing down and down, right? But at least he sold at $70K, because the bear market lows, if he would have kept it, he would have had $30,000. So at least that's a positive. But if you look at that, guys, he went from 100K to 245K to 70K. So he lost 30K. And he had the opportunity to take profits, and he would have made a really good amount of money. And what we can learn from this, guys, if you're still watching, okay, the valuable lesson about this story is the fact that it does not matter how much you guys have in your portfolio. I'm pretty sure a lot of people might have a small portfolio. I don't even consider my portfolio that big, because I know a lot of people have 100K, a million, 500K. A lot of people have pretty big portfolios. But the main thing here is that even though you guys have a small portfolio, you can actually make more than people who have a much bigger portfolio than you. Because it all depends on your skill, on being an active investor, just like John was, because he was able to turn 10K to 130K, sell it near the top, and he had more at the end of the cycle than someone like Jarvis, who started with 100K. You see what I'm saying? So it's not about how much you have, it's about how skillful you are, how active you are, how intelligent you are. Day by day, you're learning something new, whether it's the charts, whether it's videos, that you're refreshing yourself. So I just wanted to share this video because a lot of people kind of feel down when they hear about these huge portfolios, and they might have just 10K, 5K, maybe even 20K, and they might hear about these portfolios with 50K, 100K, 200K, and they might, kind of doubt themselves from making a good amount of money. But you shouldn't doubt yourself. You should be very optimistic because you can make a lot in the crypto market. And it's not, like I said, it's not about how much you have, it's about where you sell it. Okay? Even though you have a small portfolio, if you sell it at near the top or at the top, you're going to be really good compared to many people who don't do that and even have higher amounts than what you have. So stop worrying about that and just continue to be active, continue to be curious, right? Learning every single day, whether you watch my channel or other people or do your own research, we can learn a lot from this story. So I just wanted to share with you guys. I hope you guys are still watching. If you are, thank you guys so much. I love you guys. Join the free Telegram, Cryptopolis, 100% for free. Leave a comment what you guys think about this story. Should I make some more crypto stories, guys, with lessons? Let me know in the comments below. Let me know what you think. Leave a like, and I'll definitely catch you guys in the next video. Peace.